Thank you for joining us today. We'll be providing simultaneous interpretation for this webinar. To utilize the interpretation feature, please click on the interpretation button on the bottom of your screen, click Interpretation, and then click English or French. Merci à tous de vous joindre à nous aujourd'hui. Nous assurons l'interprétation simultanée de ce webinaire. Pour utiliser la fonction d'interprétation, veuillez cliquer sur le bouton d'interprétation en bas de votre écran, cliquez sur Interprétation, puis sur Anglais ou Français. My name is Tyler McCann, and I'm the Managing Director of the Canadian Agri-Food Policy Institute. Today, I'm participating in the webinar from Winnipeg, ancestral lands, Treaty 1 territory, traditional territory of the Anishinaabe, Cree, Oji-Cree, Dakota, and Dene peoples, and on the national homeland of the Red River Métis. As an organization, we recognize the need to help advance reconciliation and a stronger, respectful relationship with First Nations, Métis, and Inuit peoples. Today is International Women's Day. According to the United Nations, an additional $360 billion is needed per year to achieve gender equality. Closing gender gaps in employment could boost GDP per capita by 20%. Closing gaps in care and expanding services with decent jobs could create almost 300 million jobs by 2023. According to Statistics Canada, in the 2021 census, 30.4% of Canadian farm operators were female, up from 28.7% in 2016. In 2023, 38,610 female farm operators worked off the farm in Canada, a 10.2% increase from 2015. The rise was nearly 9 times higher than that of their male counterparts. Looking beyond the farm gate, women make up 5% of venture capitalists, and according to research done by the Canadian Ag Human Resources Council, 95% of women reported witnessing or experiencing barriers. This year, the UN is celebrating under the theme of Invest in Women, Accelerate Progress. We are pleased to be able to build on that theme today by talking about the challenges and opportunities to increase investment and the role that policy solutions can play. We are pleased to be able to bring this dialogue to you in partnership with the Small Scale Food Processors Association. SSFPA and other partners make our work at CAPI possible. Thank you to the Small Scale Food Processors Association for partnering with us to bring you this webinar today. With that, I'd like to introduce our first guest this morning, Sandy Mark, co-founder and manager of women's programs with the Small Scale Food Processors Association. SSFPA is a national public service not-for-profit organization responding to the issues facing food entrepreneurs at both the startup phase and in scaling up. Sandy works with partners across the country and leads her team to address the issues women and intersectional food entrepreneurs face accessing capital and the barriers they must contend with due to policy challenges and the well-documented discriminatory societal norms in the financing sector. Sandy, over to you.
Thanks so much, Tyler. Very happy to be here and happy International Women's Day to everybody today. Today, we're celebrating women in food, and we're, as Small Scale Food Processor Association, is very grateful to the Government of Canada Women and Gender Equality Program for the support they've given us to do research and to understand better what's going on in the small scale arena in the food system. We're very grateful for all our partners across Canada helping us in this work. Today, we celebrate women in all parts of Canada's food system, women farmers, farm wives, women who themselves are starting farms in greater numbers, women who create value-added products, and those, of course, are the women that we work with, women who work in value-added food factories and retail and institutional settings, women who make most of the food purchasing decisions in their families and organizations, and women who support women who are working in food sector through providing training, mentorship, facilities, programs, and financing. Women are feeding us, and that's why they should be celebrated. And unfortunately, so many of these women are almost invisible. Many of them are under-supported, underpaid, and their value in our communities and in our health system and in our food system aren't really well represented. So we believe it's time to empower women in food. And we can accomplish this through understanding the barriers they face, and we want to work together to mitigate these barriers. As women, we are the 51%, and these are statistics from the 51, one of our partners. We receive only 1.9% of venture capital in Canada, although we perform 63% better than male counterparts in business. We make up less than 25% of directors in Canadian boards and only 19.4% of partners in Canadian venture capital firms. Since 2014, only 20% of Canadian venture capital investment involves shaking hands with a woman, and that's through all sectors in the Canadian economy. The question that Movement 51 and we ask is, how can Canada's economy reach its true potential if 51% of the population isn't fully participating? The research that we've done with the support of Women and Gender Equality shows that the majority of entrepreneurs in the food industry are women. Our own research for our own members show that 66% are women. And we believe that although we have a very strong women's program, we know that if women do well, men will do well as well. Everybody will do well. And our business and the agriculture business is different from general business insofar as most of them have much less women involved. So we carried out this research to better understand the issues women face as they're trying to create good food products. The research shows that there are many issues that flow from the concentration of the food system. We understand that about 75% of the food system is in the hands of a very few corporate owners. We also have found that there's not a national policy supporting starting and scaling food entrepreneurs. Many provinces are doing their best to do something about this, but it's not comprehensive and it's not reliable. And we really would like to see a national policy in place. And of course, those of us who are building these food product developments in Canada are facing the fact that regional food system infrastructure is missing. It's now talk about the missing middle, and we will be doing a workshop with a webinar with CAPI later in the month. Please join us at that time. This problem of the lack of food system infrastructure is particularly a serious barrier in rural Canada. But mostly, and what we want to talk about today, is the serious problems that women face accessing finance for their business. To celebrate and support women in the food industry, this webinar will focus on the work of some leading women-led organizations across Canada. These innovative groups are breaking through the systemic and cultural barriers that women food entrepreneurs face as they attempt to access finance to grow their business. I'm pleased to welcome 3 inspiring women to help us celebrate today. I'm proud to say that these women are involved as partners and supporters of the work of the Small Scale Food Processor Association through our Venture Capital Ready program. We are training women food entrepreneurs across Canada to prepare themselves to seek investment capital. I'll put in the chat the link to our website that shows you all about that program if you're interested. Alison Sundstrom has inspired and mentored me in my journey supporting women food entrepreneurs. She's an angel investor, serial entrepreneur, and active in the 51 out of Calgary, a disruptive feminist investment platform, and many other investment organizations. She leads from her conviction that women's economic empowerment is the key to unlocking gender equality. And Sally Miller. Sally demonstrates the personal and organizational commitment that farming and food systems are relying on to meet the challenges facing us in a time of great change. She shepherded the Ontario Food and Farm Co-ops organization, and recognizing the challenges that their members faced accessing finance, turned to developing the Fair Finance Fund that supports local food systems throughout Ontario. Linda Best is the managing director and powerhouse behind the amazing development of the FarmWorks Investment Cooperative in Nova Scotia. She has facilitated a process that engages small local investors to support regional food systems to survive using a provincially supported tax credit program that we wish existed across all provinces. Welcome, ladies. Thank you for being here with us today.
And thank you, Sandy, for that introduction. We'll get right into it now with our panelists, and I'd like to welcome Allison up first. Allison, you, as Sandy mentioned, have been around investment for a long time. First as someone seeking an investment, and now as an investor. Can you just start by setting the stage as to how that landscape has changed over time? How do you think your experience would be different today if you were out seeking investment compared to how it was when you were first getting going?
Tyler, I don't think it's changed very much. And that's kind of the sad part of it. When I was, I believe that I grew up with the venture capital industry. VC is a fairly new industry formed in about 1990. And my company went out looking for funds at a time when venture capital wasn't really a well-known thing in Canada. And what I found is I couldn't find money. And what I tended to do instead of finding money was I found customers. And through that process, I actually grew my business from cash flow. Now, that's an admirable way to grow a business. And I would say that it's probably the best way to grow a business even today. But at the same time, we're missing out on those inventors, entrepreneurs that are doing something amazing, but really need that cash to grow. So when I divested my business in 2019 to a UK private wealth firm, and I decided to do two things. I decided to look at the things that were challenging for me as an investor or as an entrepreneur. And I also thought that I would like to invest and see if I couldn't help other entrepreneurs grow their companies in ways that I wish I had had both mentorship and a greater access to capital. Now, what is different today is that there is more capital. If you are a good company and if you are a good founder, you likely can find capital. It's just the process for women to find capital is not easy. And so there are several approaches from governments and others to try to correct that gender gap. But I don't think that we're doing quite the right things at the right time yet.
And Allison, what are those right things? And again, it's worth really highlighting that this is not a small gap, right? That this is, we're
No, it's
not
a
talking
huge
about
gap.
a 45, 55, right? We're looking at 5% of companies being led by women. So what does that look like? What do you think that the solutions are?
So the first thing that we really should say is that investing in and maybe because of the lack of financial or the big gap that exists, women are actually a lot scrappier founder. And so by the time women start seeking financing, they have generally accessed customers. And this is a generalization, but basically we have learned through substantial research that female founders are more successful than perhaps their male counterparts. And maybe it's just that reason that you can't find capital makes you just a little bit more scrappy. But the gap is so large. Women make up 51% of the population, as Sandra has indicated. But the wealth or the investment money is really controlled by a homogenous group. Basically, white males make up a little over 85% of all VC investors. The situation, receiving only 2% of the capital available really makes you want to question what's wrong with our system. And we'd also like to look at the fact that only about 7% of venture capital goes to agri-food investment. That's quite a statement when we consider that everyone eats and the agriculture and food industry is so world dominant and so much a great part of our GDP in Canada, particularly. So there's a disconnect for me in terms of female investors and also agricultural and food investors.
Great. Well, thanks for starting off. And again, I think we've got this great panel today where we'll be able to look at people again that are on the front lines of this, that are actually looking at changing that. So thank you, Allison, for this. We'll come back to you later for our panel discussion. I'd like to bring Sally into the session next. Sally, Sandy mentioned that, so you really have spent a career now in sustainable food and agriculture management, looking at investment through the Fair Finance Fund. And was wondering again if you could help us by setting the stage around when you talk about social finance, how do you define it? How do you describe it? What's different and what gap is it filling?
It's social finance emphasizes social returns, environmental goods. It can be equity or debt financing. The Fair Finance Fund focuses on debt financing. But in all cases, the investment is made to achieve social and environmental returns, as well as the financial returns. And that's very important. We were talking before we got started about how important it is to understand that this is not making a concession in order to get the social and environmental returns. But I think, as Allison has already started to talk about, these are particularly the women-owned businesses that we invest in. They are strong, viable businesses that have not been able to find conventional capital, and they are, they are also bringing social and environmental returns that we need to make the world a better place and providing reasonable financial returns. So for gaps, I think you asked about gaps.
Yeah.
So I think particularly in food and agriculture, with a sort of somewhat of a transformation going on, where some of the existing entrepreneurs are retiring, and the people who are coming in are not always coming from a traditional background, and they may be Black and Indigenous, lots more women. We have over 50% of our investments are going to women, and 80% of those are farmers. And this is really a shift. And if you look at the Census of Agriculture, female operators are the only ones that are increasing, and that's female operators who are a one-woman farm. So this is, this is really a shift. So the innovations of social finance are partly to fill this gap and to make sure that these future food entrepreneurs are actually getting the capital they need.
And so you talked about the people getting the capital. Who are the investors that are investing in social capital? Who are the Fair Finance Fund investors?
Well, it's really shifted. So we launched in 2019. And in those days, there was a lot of interest in impact investing, and which was more the term then, and then social finance. There were institutions, foundations making a commitment, but not necessarily ready to deploy their capital that way. So when we started, we were small. We had about $500,000 in first loss capital, but we were small. We had mostly individuals, and often people who had never invested before, and a lot of women, which makes me very grateful for the 51, because this is we're not really taking capital from other places. We're actually finding capital that hasn't been deployed before. Now, 4 years later, the institutional investors are so much more stepping up to the plate, much more aware of it. And I think also moving away, there's a spectrum of impact investing or social finance. And that's the sort of level of risk that the investors are willing to take. So very early on, it was sort of renewable energy or co-working places that were property in downtown Toronto. This is not a lot of risk, right? I mean, this property is going to keep its value. Things like, an entrepreneur who's starting a zero waste restaurant is probably farther down, doesn't have as much collateral to put against it. And so I think what's shifted is that the investors have recognized that the risk is partly mitigated by that social environmental purpose. Like, these people are doing the businesses the way they need to be done. And so that makes it, when I first started investing in this area, I'm like, this is like the best kept secret. Like, these are fantastic entrepreneurs. Our default rate has been so low, like way below even what we predicted. I think we've had 3 with a pandemic and stock market hysteria, right, and we've had 3 in 5 years. So that's out of, over 50 clients that we worked with. That's amazing.
And again, I think that's part of that myth that needs to be dispelled today, is that social finance is some form of charity by investors or something investing in
Right.
businesses, right? I mean, how often do you run into that perception that a return isn't the same?
Much less now than we used to. I think there's more of a recognition that people are willing to consider what's called concessionary or lower returns for really significant change they want to see. So I think we're seeing that where sort of outcome-based financing and sort of shared risk financing with, say, urban agriculture, which is mostly driven by Black and Indigenous growers and things like that. So I think we're narrowing our criteria and our evaluation of how we understand this, so we can create a sort of blended portfolio, which might have some things in it that are below market rate, and then yeah. So I think the understanding has become much more nuanced, and that's partly thanks to places like the 51, helping, I think, to talk. But we often have, particularly in our early years, we would often have investors come to us who had never invested before. And we
Right.
would, at that point, we didn't really have the 51 to send them to. And we would, sort of work through it. We did a lot of webinars and what this looks like, and, how easy it is and how good it feels.
Great. Well, and so thank you, Sally. So we'll come back to you after. Want to go to bring our final panelist in. Linda is the managing director at FarmWorks, and Linda, we'd like you to start by talking a little bit about what FarmWorks is and kind of the particular nature of community investment, but really interested in getting into what's different in Nova Scotia. What enables you to do what you're doing in ways that people across the country don't get the same access and benefit. But let's start with, what is community level investment, and how are you approaching it?
I wrote the first couple of lines because I want to try and capture as much in a short time as possible. Local investment opportunities such as FarmWorks Community Economic Development Investment Fund enable people to support what they know to be of value. And in Nova Scotia, that investment fills a huge gap, especially with food. Small and medium-sized food enterprises are often not able to find the funds and other support that facilitates growth. So the CETA program was set up here in Nova Scotia in 1998 or 88, and we became aware of this 13 years ago now. We've just had our 13th offer of shares. And we realized that looking at what was happening around Nova Scotia with regard to food, something needed to be done. I'd grown up on a farm. I realized the challenges that were currently being faced right across the board. So we FarmWorks adopted that program, and we've raised a significant amount of money. We wear many hats because we're not just agriculture. We're not just the financing piece. We're looking at health and community and bringing those pieces together. The educational component is huge. The lack of funds in Nova Scotia, as across Canada, is increasing because there's less and less awareness of the benefits of food production. So we're filling a huge gap, and we're making making a difference thanks to the CETA program, which allows people to benefit from 5-year investment terms, 35% for the first 5 years, followed by 20 and 10. So as a banker said, it's a win-win-win, because the investor is getting that tax return for, as I said, investing in something they believe in. And the clients are certainly benefiting. And it's interesting that just about 50% of our clients are women. Most of them are part of partnerships. And I would say, I haven't looked at it specifically, but I would say about 50% of our investors are women. One of the key things, because we have a vision: healthy farms, healthy food, healthy people, healthy communities. And our clients tend to to buy into that. They are on the same page as we are. So it's a program that's working in Nova Scotia. It is helping us to put more good, healthy food on the table. And I've spoken in many places in Canada about the benefits of this program.
And how much of, again, you get into that same dynamic where what kind of returns do you talk about for your investors? How does that play into it?
The returns are both financial and social. That provincial tax credit is a substantial individual benefit, but the social benefits are multiple. There's more farms producing more food for more people. The nutritious food that's grown here, picked at the peak of freshness, that hasn't traveled long distances, is healthier. There's employment. We're bringing people back to communities. We have local stores and restaurants that are hubs in those communities. And our most recent survey indicated that the benefits are to our clients and shareholders are benefiting the whole of Nova Scotia.
Right. And so I want to bring Sally and Allison back into this, but Linda, I'll just stay with you for a minute to really drill into the role that the tax credit plays and what is that doing to help put more investment into the community? Would you be able to do what you were doing if the tax credit offered by the Nova Scotia government wasn't on the table?
I think Sally isn't what the Fair Finance Fund has achieved is an indication that yes, our work would be harder, but it would be still achievable. I think that that many of our investors, we have over 550 investors across the province. And by the way, shares started at $1 or $100, and we have people who buy occasionally 1 or 2 shares, up to people who buy $50,000 shares in a year. So across Nova Scotia, we have our biggest challenge with regard to raising those funds is getting the word out, because as we all know, it's difficult to persuade people that other than a known financial institution that we should put our money into these things. But the bulk of our investors probably, if there were a program here like the Fair Finance Fund, would benefit. However, when in Nova Scotia at this point, a huge amount of our budget is spent on health repair, and a tiny fraction of our money is spent supporting the Department of Agriculture. Filling that gap would be really difficult. And I think as people have lost sight of where their food comes from, I think the need for a program such as this, which the history of the CETA program in Nova Scotia is not just farm works, obviously. It's housing with New Dawn and community facilities across the province. So it's a program that certainly, well, it's being replicated, in fact, in a couple of US states. So I think, in fact, there's tremendous potential for it to be supported in Manitoba, where they have the program in place. I think that BC has some of the infrastructure that could be put in place, and so on.
And Sally, how much easier would your work be and that ability to attract investment if that tax credit opportunity was there?
Yeah, and Linda, I really appreciate you highlighting what we've achieved, but it would have been possible to achieve so much more and faster with the tax credit. And I actually kind of held for a couple of years in the hopes that it would come through here, but it didn't, and this really needed to happen for the entrepreneurs we're helping. But I think one of the reasons it's so important is that, and I think why it's relevant for government to consider is because it's actually unlocking capital that wouldn't have gone out otherwise, right? So when I was talking about the kind of investors that we have, the individual that are coming to us are not necessarily high net worth individuals. They're often middle class or professional retired people, or a lot of women. I just counted it up. More than 50% of our investors are women. And that tax incentive, if it's done right. So one of the things I would say that I've learned from Linda and from sort of looking at how it was implemented in other provinces, not only do we need the program, but it absolutely has to be implemented correctly. So there's been a couple of times when it was implemented that it failed, and it's not because it's a bad idea, it's because it was not implemented right. And part of that is because it's bringing in middle class investors, upper middle class. They need the tax break to be usable over multiple years and over enough years to sort of fit the size of their income. So that's Linda, you can probably talk more about the essentials that make it work, but I think if what it needs to be implemented the way Nova Scotia did it, and then it just sort of unlocks so much more potential for us.
As I said, the biggest challenge for us is getting the word out. And for example, this year in our offer with by the way, there's a RRSP component to this as well. In Nova Scotia, we are able to put our money into Canadian Workers Cooperative Federation, which then passes the money on to Farm Works. So that enables I think about 40% of our clients to benefit from that as well. That I'm not at all certain about this, but there should be a way that federally there could be a component that would enable that, even if provinces don't. So that's a big discussion for other days. But it's education. It's raising awareness that that there are many ways of investing. But if you're investing as our investors do, in a portfolio of businesses that's going to give you, as with the Fair Finance Fund, that broad range of businesses, because our money goes to farmers all the way up to high-end restaurants. So we're investing in the whole of the food system, and we're actually considering a cooperative of our clients so that they can be supportive and mentor one another. So
and thank you, Linda. And Allison, I'm curious. I think often I think we have a Canadian preference for, if we want to encourage more investment, we've got to ask government to create a program, and we'll let government. In the US, I think there are these more of this encouragement around what are the tax incentives, how do we better use tax credits to encourage investment. And I was wondering if you could speak to your thoughts around these tools to put more capital into the system, but not public capital, but public tools to put more private capital into the system.
Sure, thank you, Tyler. We're talking about a wide spectrum of capital here today, from very local investment groups, perhaps we might call them microfinance funds. And across Canada, we need this wide spectrum of capital that goes from the local and community-based up to enabling our businesses to compete globally. And each one of those opportunities, you invest in a community finance fund, you will get results back into the community. But as a larger economic imperative, we need to be considering how to invest in food and agriculture at this entire scale or entire spectrum of capital. And financial levers and tax credits are perhaps what I consider to be the best mechanism to enable investment, both at the community and rural area, all the way up to global impact. I think that if we had the political will, we could create a system that could enable this to occur. Why it's so important to invest in women and activate women's capital for investment is that women by 2030 in Canada will control 65% of our personal wealth. Traditionally, we do not invest. We do not have investor networks. We do not have programs that teach us how to be an investor. And there's many good reasons to invest in women, but also why women should be investing in diverse companies, not just female-founded companies, but diverse companies. We must change our head to an investor headset. We're not programmed that way in Canada. We do look to the government first, and the government essentially is less wealthy than our pension funds. Our pension funds in Canada, we have the third largest pension resources around the world. We're basically savers. Now we need to teach ourselves to be prudent investors. And there's several reasons why women make good investors. And they really do focus on some of the things that both Linda and Sally and we're discussing, is that women take a longer term view on investment when compared to men. We're not as easily looking for immediate returns. We want to see the investment in our community, our families, and our social structure. I'm speaking a little bit generally, but I think that women do greater research and diligence. They are emotionally perhaps just a bit more geared to seeing social outcome on what they invest. And women are very collaborative. They tend to seek advice. They collaborate with others when making investment decisions, and they really know how to adapt. And we focus on it, sustainability and social responsibility. So our investments, we like to see financial returns, but we also like to see something that's going to benefit our families and our children and future generations. And I think that's fundamentally the ethic of a Canadian farmer, is that you are investing in keeping your land alive for the next generation. But at the same time, we have to be receiving economic returns and then being able to invest those returns. And I think the government has a very large place to play, where if we make an investment, they could hedge our risk through a tax credit or other similar incentive.
And I think so. We talked in our prep call for this week a lot about rural communities and rural economic development. And I think often in the agriculture context, we think about agriculture as farmers, but it's not just farmers. These are farmers and processors and suppliers and restaurants and retailers and others. And Linda, maybe if you could just talk a bit about what does that spectrum look like in your community level investment that you're doing, and how does that broader impact on rural communities play into this and rural economic development?
When we started, it was about the farms and the loss of those over time, but we quickly realized that farmers have to wear too many hats. Most entrepreneurs do. They were not the best marketers of their produce. So we started investing in restaurants so that we'd have those chefs to profile the farms. And then we started filling in to the best of our limited ability, because that missing middle is that needs a lot of funding. But we're trying to complete that circle. We're trying to make sure that all of the aspects, from the individual farmer and farm family to the restaurateur who's putting great food on tables, that we're putting all of those pieces together. And this is a challenging time in history, as have been many other eras. But when you read David Montgomery and dirt and what's happening to the soil, when we look at the environmental issues and the fingers pointed at agriculture, we all have a responsibility to help the people we're investing in to do the best that they can. So looking at our food in silos, it doesn't work anymore. So bringing food back home where possible, ensuring that Canadians, starting in Nova Scotia, and Canadians have the capacity and the funds to do what they can close to home, and then building that out. Some years ago, it was pointed out to me that people who aren't too interested in local probably aren't thinking about the downstream effects of buying food from produced by people who don't have the benefits that we do. We're looking at making sure that our farmers do as they already do, and provide whatever they possibly can to the less advantaged people in our society. So it's got to be holistic. That's one of my key words. Bringing awareness to people of all of the aspects of food, and carrying it that right through our society and beyond.
Sally, Linda just talked about how this is a challenging time, but I think it's a time of transformation, evolution. I think, if you look at the fact that we're celebrating International Women's Day today, the UN's theme is invest in women, accelerate progress. It seems like there's a lot more attention being paid to the need to invest in women, and the benefits of accelerating that progress today and in the past. When you look forward, are you optimistic? What changes do you see on the horizon? What are the benefits if we get this right?
Well, I think it's pretty simple. I think the benefits of having more equitable investment and investing in these businesses, we've talked about how viable they are and how they're bringing social and environmental goods, then the benefits are that we are no longer missing this this huge swatch of very important businesses. And I think, as I said earlier, as we see a great increase in female farm operators, and 80% of the women that we invest in are farm operators. That's a change and a movement that we're seeing, and we need capital allocation to keep up with that. And so I think, it just makes sense to me. If you're investing, you don't want to miss a whole swatch of the population that's doing a really great job. I think the other thing I would mention, back to something I think Sandy was talking about earlier, and as Linda said, we invest in the whole food system because it doesn't help to just invest in farmers if they don't have markets, right? You have to get the whole thing, and that is part of what builds rural economic development. It's consistent for us as we're kind of rebuilding the middle of the infrastructure of processing and distribution and some of the things that we kind of lost in previous decades. A lot of that is driven by women and by these sort of new entrepreneurs that are coming from that sector, and we're definitely seeing that. So I think it's sort of tied in. If we want the infrastructure to power a strong rural economy, that also means we have to stop ignoring the women who need capital.
And are you optimistic? Like, do you see
Optimistic
trends? Yeah.
Yeah, I guess I should say yes, I am. I mean, I guess I was saying I think we have to, but I think we're going to as well. I think it's changed so much in my mind in 5 years, and sort of recognition of the strength and resilience of women's businesses, but also equity deserving groups in general, right? So there's a much larger recognition of how important Black women businesses are, and it's even more barriers to capital, and recognizing that equity has to be addressed there as well. But I'm very optimistic. That's why I'm doing this. I think this is a really exciting place to be right now.
And Allison, what's your thoughts on the optimism? What does the next 5, 10, 15 years look like? You know, are the scrappy women leaders that you talked about earlier, are they going to be easier to find the investment?
Well, I think that, yes, if you have a good business plan. And I think that should be mentioned first and foremost. This is not investing in women because they're women. This is investing in women because they have good business ideas. They have sound financial feedback, and they know how they're going to make money. And so I want to take it away from the little sort of the pink corner and the social nicety. This is an huge economic opportunity investing in food and agriculture. And Canada has the ability to be an economic superpower if we understand we must invest in infrastructure. We must invest in rural economic development, not charity, but true economic development. If we look at ourselves as the top 5 producer of agricultural commodities, why are we not one of the top exporter of those commodities? Why are we not paying fairly at the farm gate? There are so many things that we have to address to make a very solid opportunity. And I use the Netherlands as an example always. The Netherlands is a country that it's a little bigger than Banff National Park, but it outstripes us in terms of agricultural exports. And there's a fundamental reason. And the fundamental reason is number one, the government in Holland believes that the Netherlands are an agricultural nation. We talk a lot about our farmers, we talk a lot about farming, but if you ask Canada what kind of a nation we are, I don't think you'll get a response. We are an agricultural nation, which indeed we are. And so rather than shipping raw products and raw goods, we need to start focusing on shipping value-added products, value-added goods. And we also have to invest not only in our infrastructure, but our digital infrastructure so that rurally, internet connectivity is wide and affordable, and that we consider that Canada is a nation of producers of agricultural products, and also we have an incredible science and technology background. So from my perspective, investing in food and ag in Canada is highly exciting, perhaps one of our greatest economic opportunities going forward. And I just wanted to stress that I am incredibly optimistic about the future if we can get the support landscape, the financing landscape, and the levers just right.
And I think that this interesting reality, right? I think that we often talk across a variety of different issues that the fundamentals in agriculture and food today are strong. We should have the right conditions for success. We've got demand going up around the world.
Yes.
We can produce a competitive, affordable product, but yet we seem to struggle at times to unlock that potential. And again, I think putting it back into that context of women-led businesses and women investors, the fundamentals are there. The fundamentals are strong, right? You talked about the examples. You all could come to the table with the what should be the conditions that we need to success to demonstrate the benefits of doing this. Yet we can struggle to unlock that full potential. And I think it's I don't know if it's a psychological issue we have in Canadian agriculture and food that we just can't seem to get that figured out. But I do really wonder, and I think we're seeing more of this, the role that better tax credits and better incentives can play in unlocking that potential.
I think once we cease to rely on government and start to see that there are initiatives that have been incredibly successful. Sally's initiative, I did not realize how successful she had been. That default level that she spoke of was quite amazing. So, you know what we need to do in Canada? We need to understand we are incredibly competent, able to be an agricultural superpower. we should invest in an inclusive society. And we should understand that, yeah, we can do it. We don't have to wait until someone from away tells us what to do. I think we can do it ourselves. And so this is really about empowerment. And I don't like the word empowerment so much. This is just the word of we are capable and we can create a very inclusive, socially responsible, but a financial powerhouse out of our agricultural and food sector.
So let's end on getting down to the nitty gritty. So what do we actually need to do about it? So I want to go around and we've had this question come in. I think it's a really good note to end on. So the question is, what are 3 things we could do today to take action on the inspiration the panel has bestowed? And so maybe Linda, I'd like to start with you and then go to Sally and Allison at the end. What's your list of 1, 2, or 3 things that you think that we could do as individuals, as organizations, and then the government could do to take action on what we've talked about?
The first one is education in whatever form that takes, because when I was growing up, everybody knew farms and farmers. Now we don't. And one of the challenges for us is raising awareness of what exactly farming food production does mean to us. The other thing is to keep thinking about putting the pieces together, because we can't keep avoiding the connection between what we eat and our health outcomes, and we see that widely. And the third thing I would say is that, to echo Allison and Sally, we have huge potential. When I speak, it's always in terms of the challenges that we have now, but the opportunities. And so I'm looking at it regionally with regard to farm works and the challenges that we have in a province that has for years not paid much attention to agriculture, and our knowledge and our investment in has massively decreased. But we still have the potential. We have the potential to feed ourselves and to go beyond that and to be part of the larger picture. So those are the key things from my perspective.
Sally, what's your list of concrete actions that somebody should be taking?
Well, we said individual, organization, and government, so I picked one for each. So for individuals, sort of speaking to women and any sort of investors, I always say, put your toe in the water. And that's one reason our community bonds are 5,000 and 50,000. So we have people who often come to us and they're like, never done this before, want to do the 5,000. That feels great. Next year or so, they'll put in more. And same actually for the institutions. So a lot of the foundations started with sort of a small percentage of their portfolio, and that worked well. So, and I think it's, think about what your money's doing, not just what your returns are, but what you're actually accomplishing with it. The organization one, I wanted to say to you all, again, we did this during the pandemic, but I think it's time to do it again. The investor webinars where we're sort of, the collaboration to me is so important in this, and so many of the social finance funds are women driven. We need more of these where we can all sort of just talk about what we're offering and support each other. There's such a range of things that are going on, and there's I think discussing it generally rather than just us getting out and doing the Fair Finance Fund webinar, I think doing it together is really powerful and showing that the ecosystem is changing. Last thing I just always say with government, just get those CEDIFs moving. It's just, it's so easy. Canada Revenue Agency has approved it. It just has to be implemented by each of the province, easy peasy. So that's my third action.
Great, thank you. And Allison, over to you. 3 actions we could take.
Thank you, Tyler. I think the first thing is be the change you want to see. And by that, if you look at the gray hair on this panel, I'm sure that we could all be sitting on our laurels right now, but be the change. There's nothing like experience and to advocate for change. The second thing is speak to your government about tax levers, tax incentives, business expenditures on research and development incentives so that we become the most automated, forward-thinking, technologically enabled country. And then finally, if you're a woman listening to this event today, you likely have wealth. Consider how that wealth is invested. Consider where your money is placed. And if you have never invested before, even in a microfinance or in an EFT, always look to see what your investments are doing and what kind of change they are making. So basically, be empowered. And every time someone asks you what Canada is all about, say Canada is an agricultural superpower.
Great. And that's a good note to end on. Allison, Linda, Sally, thank you very much for this discussion today. And thank you, Sandy, and the small scale food processors for partnering with us on it. Again, International Women's Day is a day that we get to celebrate the really important role that women play. And we were happy to be able to shine a light on the potential that exists for women to do more and the benefits of investing in women. Join us again on the 20th of March as we host another webinar with the Small Scale Food Processors Association on that missing middle and regional food systems. And stay tuned to please feel free to join the CAPI mailing list, follow us on social media, subscribe to our YouTube channel where you can catch this link again. And we encourage you to share it with all of your contacts that might not have been able to join us today. Thank you all for being with us, and happy International Women's Day.